over 66% of Chainlink's circulating supply is now concentrated on centralized exchanges, with Binance alone holding 85.1 million LINK tokens. This represents a significant portion of the market's LINK reserves and raises questions about the token's decentralization. Recent on-chain data reveals a shift in investor behavior, with a 2-year decline in LINK reserves on exchanges. Previously peaking at 145 million in 2022, the current reserve has dropped to about 85 million tokens. This transition suggests that holders are moving their LINK holdings into secure storage solutions outside of exchanges, likely to avoid risks associated with centralized platforms. The decline in exchange reserves is not a temporary fluctuation, but a consistent trend, with occasional upticks due to market volatility quickly stabilizing. This pattern indicates a growing preference among Chainlink holders to store their tokens in personal wallets rather than on exchanges. Binance's dominant position in holding Chainlink tokens has a direct impact on market dynamics. The platform's deposit and withdrawal activity can significantly influence Chainlink's price and investor sentiment. Market observers are advised to closely monitor these movements to better understand broader market trends. Despite the decline in exchange reserves, interest in Chainlink remains strong through spot exchange-traded funds. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. While there was a dip in May, the funds still showed consistent inflows with no recorded net outflows yet. This suggests that institutional and retail investors continue to see value in Chainlink, even amid shifting storage preferences. The centralization of Chainlink Funds is a growing concern among investors and analysts. The concentration of a large portion of the token's supply on a single platform like Binance increases the risk of regulatory scrutiny and potential market manipulation. If a large portion of the token is held in one place, it could be moved or liquidated in a short period, leading to sudden price swings. The decline in exchange reserves also signals a shift in investor strategy, with more people prioritizing long-term storage solutions. This behavior reflects a growing awareness of the risks associated with holding large amounts of crypto on exchanges, especially after several high-profile hacks and regulatory actions. However, the centralization of Chainlink Funds still poses a challenge for the project's decentralization goals. A healthy decentralized network relies on a broad distribution of tokens among various holders. If a significant portion is concentrated in a few platforms or wallets, it undermines the project's core principles. Investors and developers should remain vigilant about these trends and consider how they might affect Chainlink's future development and adoption. The next signal to watch is the continued movement of LINK tokens off exchanges and into private wallets. If this trend accelerates, it could signal a stronger shift toward decentralization. Conversely, if Binance or other exchanges start to increase their holdings again, it could indicate renewed volatility or investor uncertainty. Market observers should also track the performance of spot LINK ETFs, as they provide insight into investor sentiment and demand for Chainlink. If the inflows into these funds continue despite the decline, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. In exchange reserves, it could suggest a broader institutional interest in Chainlink. However, if the inflows slow or reverse, it could signal a loss of confidence in the token's long-term prospects. In summary, the centralization of Chainlink Funds is a developing issue that requires close attention from both investors and analysts. The movement of tokens off exchanges and into secure storage is a positive sign for decentralization, but the concentration of funds on a single platform like Binance remains a risk. The next key signal will be whether this trend continues or if there is a reversal in investor behavior.